Welcome to another video. Today I will be sharing with you a multi-time frame analysis, and most importantly I will be inserting inside of the analysis some very important educational topics that you have to know when you are basically trading, and anyway when you are developing a trading strategy. So the video will be very valuable and I suggest that you watch it until the end. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms, so I suggest you subscribe and I will see you in the video. Okay, so today I want to speak about AUD USD. Why do I want to speak about AUD USD? Because at the moment we have an opportunity to be looking at potential opportunities to capitalize on AUD USD in the near future. So let's start our analysis from the monthly time frame. As usual, I will try to keep the analysis as educational as possible. So first technical analysis, then COT data, so what hedge funds are doing at the moment on this pair, and then we will be speaking about how we can be capitalizing on this pair. So let's start from the monthly time frame. What kind of situation we have? Now on the monthly, we can see that the market made a move to the downside, back up, and then created a lower low, basically broke this structure level. We had pretty strong support at this zone. We had support here, again support at this area. The market broke it to the downside, and as you know, previous support is turned resistance. So at the moment we have a level of previous support which is now turned resistance that the market broke, and the market is now retesting. Now from the monthly we can also realize that we might get a deeper test of this supply area, because usually the market likes to go for a deep dive inside of the liquidity zone before actually making the move to the downside. So on the monthly, keep in mind previous support turned resistance. What we can also do from a monthly perspective to gain more information on this pair is taking our Fibonacci from the high to the low of the impulse, and what we can see. Let's be precise. Let's put it exactly from the high to the low of the impulse, which is exactly what you're supposed to be doing if you want information on a retracement in the market. Let's zoom in because I want to show you a concept here from a Fibonacci perspective. The market last month closed above this 0.618 retracement. Now after the market closed above, obviously the level is broken, and since it was resistance, is now turned support. What does it mean? It means that now that the market broke above it and went for a retest, the market obviously respected it as new support. So previous resistance turned support from a Fibonacci perspective on the monthly, and we can expect the market to go and test this 0.786 Fibonacci retracement. Why? Because it's lining up perfectly with the structure, with the previous support, which is now turned resistance here from a monthly perspective. So on the monthly, everything indicating for a minor push to the upside, and then definitely to see a rejection to the downside from this confluence of resistance. Let's go down on the weekly time frame and see what kind of situation we have. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now from a weekly perspective, we can see that this is even a stronger area that we could imagine. Why? For the simple fact that it was very strong support here, against support, acting again as support here, then the market broke the zone to the downside, went for a retest, and the market started this huge meltdown to the downside. But keep in mind that this is exactly where the market is now, meaning that after this huge meltdown, the market retraced 100% of the move to the downside and is again testing this very strong supply area. So an area from which the market created all this huge move to the downside, and we can expect the market again to respect this area as new resistance and possibly create a rejection to the downside. So also on the weekly, we can expect the market to make a move away from this zone, which means that it is in alignment with what we want to see from a monthly perspective. A little bit more of push to the upside, and then to see the market make the move to the downside, just to see the market hit that 0.786 Fibonacci retracement from a monthly perspective. Now on the daily, what do we have? On the daily time frame, everything is pretty simple to follow. Why? Because we have a market that is creating higher highs and a higher lows, and all structure at the moment is to the upside. What do I mean by all structure is to the upside? We had this previous resistance here, which the market broke to the upside, went for a retest and respected as new support, completing this impulse correction and impulse pattern to the upside. And at the moment, the new structure is exactly here. So we have at the moment this previous resistance, now turn support, which the market is respecting. So on the daily, all structure is bullish. What does it mean? It means that we can't go down and look for potential entries from a 4-hour perspective because everything is still bullish. Always remember, monthly, weekly, and daily are the best time frames for the direction. When it comes to entry, it's best to look for entries on the 4 hours, but if everything is bullish, from a structure perspective on the daily time frame, you obviously can't be looking for shorts because it's simply too risky. I mean, it makes no sense because you would be shorting at daily support. Now let's go and see what kind of situation we have at the moment from a COT perspective. So what hedge funds are doing on a AUD USD. Now, what does it mean what hedge funds are doing? Now, the COT data will give you which is the commitment of traders, will give you the positioning of the non-commercials in the market. Now, the non-commercials in the market are the biggest speculators that they are in the market, and they're winning most of the times. So following their orders, which they are forced by regulators to actually show, we can gain an edge in the market to understand if they are positioned in a certain way. We can understand what the market will probably do and use that in confluence with our technical analysis and rule-based strategies. That is exactly what we do with students. Now, at the moment, from a COT perspective on the AUD, we have a situation in which hedge funds have been adding more shorts. In fact, we can see that with the last reports, they first added a 5.7k short positions and then another 2.1k shorts. But at the same time, they're continuing to add their longs during the move to the upside, which is exactly what you expect. But what does this mean? It means that they are starting to loading up their short positions while the market is moving to the upside, meaning that we can expect the market to show a distribution. So hedge funds are opening more shorts and starting to close their longs before the market makes the move to the downside because they're already adding their shorts. Now, from a net position perspective, we can see that at the moment we are sitting at minus 39k in net positions, meaning that we have shorts outweighing longs with 64k shorts and 25k longs. So way more shorts than long positions at the moment. And if we go and see what we have from an exposure perspective, we can as well see that we have a 48.8% short exposure and 19.1% long exposure. So going back to the chart, we can definitely expect the move to the downside, but as usual, trading is reactive, is not predictive. Just because you want to see the move to the downside happen, it doesn't mean that you can immediately go and open a short position. All your rules must be satisfied before you can react to all your rules being satisfied and actually place the trade. Now, I don't know the rules of your strategy, but first of all, with students, we will have to wait for the market to actually break the daily structure. If the market will break the daily structure, at that point, what we will be doing, we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market provides to us one of our valid entries, we will be taking a nice short position with a good risk to reward and good probabilities for a nice move to the downside according to the rules of our strategy. So obviously we have very clear set of rules when it comes to direction, entry, stop loss, take profit, and everything. But I wanted to share this full analysis on AUD USD because I'm sure that you took value from it and you know what we will be looking, and it might align with what you have from your strategy perspective. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis that I share on all these platforms. And also make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, and take profit. And I also answer any question that you have each and every day. So it's a very valuable program and very complete, and I suggest you go and check it out, or I will see you in the next video.